Hello, everybody. Welcome to another update on a stock screener. Um, as you know, the gold price has been moving upwards lately, and yeah, everyone is preparing for a recession. As you know, the yield curve here, the blue line, is inverted, and every time when this happens, you will get into a recession. Those are these gray areas. And I think we're about to move up again when the Federal Reserve is cutting rates. So everyone will prepare for higher gold prices and also higher silver prices. So how do we do that? We need to buy mining stocks. So I'm going to recommend to buy Almaden Minerals, and I will tell you why this is. So this stock has been moving down, up and down. So technically, this should be going up again um, later this year. There's a market cap of 100 million, and well, basically, this is a developer of gold and silver. And yeah, they did a feasibility study and are ready to permit, to go to the permitting phase. And they will also need money, of course, to construct it, construct the mine. It's a mine in Mexico. And they probably will be in production somewhere in 2022. So you need to be early here, and yep, you can benefit from higher prices when gold and silver goes up. So let's go over, I made a presentation actually. So what are the pros and cons of Almaden Minerals? So let's get over the pros first. So it's a 50% gold and 50% silver deposit. So it will have a high exposure to silver, which is very important because we will get a slingshot effect from silver later on. The gold price has gone up, but silver has not gone up yet. So if this goes up, then Almeida Minerals will have a slingshot effect. And yeah, this is also important to know. Um, well, the company needs to dilute shareholders, of course, to get money to finance the construction of the project, and you will have dilution. But when the gold price goes up, probably the shares will go up, and then you will get less dilution. So the higher that gold goes, the less dilution there will be, and the higher even that the stock will go up. So that's actually a slingshot effect. The third pro is that it has 5 million ounces of gold, and that's very cheap because normally you would multiply this by 30, 40, then you would get 200 million ounces of gold. But currently the market cap is only 100 million ounces. So this should already be a double from here, and we haven't even constructed the mine yet. Now we have a mine that has a net present value of $400 million at current gold prices. So when you go from 100 million to 400 million, so this is the net present value is actually the value that you get after you have mined the whole project for, in this case, 10 years, 11 years. Then you will get a market cap of 400 million. And you can see that here. So currently we have a net present value of, we are right here. So 400 million is right here. We have gold at 1400 at this moment and $16 silver. So I think we're pretty much at the NPV of 380. So this is easily a double from the current price of the shares. And if gold prices go up, of course, we will get higher here. We will go to 500 million, only at $1,400 gold. So I believe that we will go to 1500, 1600, and silver will at least go to 20. So this can be go even higher. Now the feasibility study is completed, so that's a plus. We don't have to worry about that anymore. They already have a mill even. So construction of the mill is already done. And now they are doing the environmental permitting. So they've just submitted this permit for the government of Mexico, and they also addressed the water problem, which was the main issue. So they have addressed that. And what's also very important is that the big guys, Eric's shareholders and Peter Schiff also buy this. I can show you this even. So when you look at the Europe Pacific Gold Fund, that's Peter Schiff's gold fund, and you go to the holdings, you can see that one of those holdings is Almaden Minerals. And 5% is a pretty high exposure for exploration play. So I think he's pretty confident that this will go up. Now there are also cons, of course. The main problem is that we have probably a 30 to 5 to 50% dilution of the share because we have a very high capex cost for this mine. We need $174 million. So probably half of it will be debt financing, let's say 100 million debt financing. That would put the debt at 100 million at an equity of 100 million. So you would have half debt, half equity, which is high, of course, but it is manageable, especially if this project is very profitable, then you can pay off that debt easily. And the other 70 million will have to come from somewhere else, like royalty streaming, or maybe someone needs to buy out the company, which is also probable. Or you can dilute the shareholders. And yeah, 70 million is probably 90%. Uh, it's, it's very high as compared to the equity. So you would have to double the share count. That means that we have a 50%, 40, 50% dilution. But of course, I think that the share price will move up towards the end of the year, maybe double from here. So actually, I would think that this year will go up to $2. So that would make the market cap 200 million. So 100 to 200 million. And what that gives is that the dilution will be cut to 30%. So I think that that would be the optimal scenario. We will first have a repricing of the shares upwards, probably because the gold price will go up, and also probably because the permit will be approved. And if the permit is approved later this year in December, then shareholders will see that the risk has been gone, so they will buy it up to the $2 level, and then we will probably see only 30% dilution. So that is probably the plan here. And yeah, 30% dilution is not that bad considering that we have around 400 million net present value. So if you cut off 30% of that, you still have 300 million. So it would still triple the share value from what it is today. Of course, everything depends on the environmental permit and the local community. So if we don't have the permit, then this would be zero, of course. But I think that the permit will be approved later this year. There's of course gold and silver price risk if the gold price goes down, then you will have more dilution. But considering the fact that we are going into a recession, I think the gold price will be going up. Another risk is that we have 1.5 years of construction. So you can look here, the construction is going from 2020 till commissioning in 2021. So probably it will delay it a bit. So I would think in 2022 you would have full production. So yeah, that's another risk here. Now let's go to the company presentation. So they say that they have the 2.5 million of reserves, but they don't count, of course, the other inferred resources and unexplored areas, which will total 5 million ounces of gold equivalent. So it will be an open pit, very easy. And they have a very high rate of return, even at these prices. And currently the gold price is much higher. Okay, silver is still at 17, but it will be going higher as well. Now here you have the capex very high, so the dilution will come from here, but there is plenty of upside in the net present value of the project. You can see here that the share price is low, so you need to buy here as it will go back up to the $2 range. It has no debt at the moment, but they will issue debt, of course. Here you can also see that Tocqueville Gold is a shareholder. Some things to consider here. It's very high grade, 2 grams per ton. That's why the net present value is very high here, and it has a high return on investment. So this is how the project will go. So they have gold as well as silver, and the AISC is very low. It's in Mexico, and the open pit mine is located here, Ixtaca zone. So look at this, it's very high grade. As you can see here, all at 5 grams per ton. So yeah, it's a very good project with good geology. Open pit is this. And there is plenty of exploration upside. So this is the mill that they already bought, and they are shipping it to the current site. And this is the production profile. So they start with high grade and then go to low grade after 6 years. And you can see that there's a leverage here if gold prices go higher. So there is also other zones that they can explore. So there's growth here. The potential is good. And this is their plan to go in production somewhere here. So yeah, I think this one is one that has a high probability of going up double or triple in 1 or 2 years, even at these gold prices. So as long as they get their permit approved, then I think this is a very sure play. Okay, I will see you in the next video.